Welcome to today's episode of the Dojo podcast, the DeFi Dojo podcast. As always, joined by my co-host Mara, and markets are, they're up and down, right? Technically, we got really close to 100K, like 99,850, so remarkably close. And then I don't know if nuked is the right word, but retraced, roughly 9% down to like 91, 92K now at the time of recording this. How you feeling?
I'm feeling good. It feels like there's a little bit of anxiety in the air. It feels like, people have been kind of expecting really kind of positive price action. And now that it's not just going up, I think there is a little bit of anxiety, a little PTSD from the bear market and stuff. I'm not feeling overly anxious. Maybe that's just me being a little naive, but, in previous cycles, we did see pretty large drawdowns, like there tends to be quite a bit of profit taking after a massive run up, like we even saw, I remember last cycle and even the cycle before, like 20%, 30% drawdowns were not, out of the ordinary. It feels like, there is this kind of like broader worry, I guess, of there might be some geopolitical issues kind of going on, and that might be a bit of a drag on the market. But I don't think there's anything fundamentally different that's going on now that's like bearish or it's been too frothy or we've gone up too much. My base case is still pretty much that we see things being pretty constructive through the new year up until the inauguration. I think there might be a bit of a hangover after that happens where, maybe the new administration can't quite live up to all of the expectation and hype that the crypto community has put on it. And we see a bit of a pullback. Maybe that goes into next summer, and then next fall we probably are back at it again. That's kind of my base case, but curious to see what you think, Stephen. Are you getting a little bit nervous?
I said, yeah, I'm getting a little bit nervous because last cycle we had a few like 25, 30% drawdowns, and I just don't want a 25, 30% drawdown, but you should be ready for it to happen. Yeah, I am getting a little bit nervous because last cycle we had multiple 20 to 30% drawdowns, and I don't want one of those. I'm a little bit leveraged long. That's probably a source of my anxiety, I would say. And hitting what do they call it, a psychological number or milestone or whatever those things are called of 100K, in bouncing down from there, I think it's going to be one of those things that's going to be hard to overcome. So I wouldn't be surprised if we go down to like 80K or retest the weekly 8-week moving average or 20-week moving average or whatever. It seems totally within the realm of possibility, and that would be painful. But then, of course, consolidate and then hopefully go back up or accumulate and go back up, whatever it is. So here, yeah, it is going to be painful. I do obviously think that we're going to go higher. I am not as bullish as you, or at least as long-term as you. I don't think that we're going to be bullish until next fall. I think the cycle might be shorter than that. One, because of geopolitical concerns, like you mentioned, and two, just because cycles tend to get a little bit shorter and less big, pronounced, right? So each bull market goes up less than the previous bull market, and I do think that just global economies are getting a little bit too frothy. So that's where my head's at. I'm aiming for mid-March to sort of like transition into less and less long exposure on my portfolio. Currently, totally long. In fact, I'm leveraged long, but I do think that taking some profit incrementally until, my personal top thesis, which is around mid-March, is going to be the name of the game. So I know that our other moderator, Jungle Book, he is beginning to take 20% of his portfolio. He was fully long exposed as far as I know, and is putting it into stables, and is going to continue doing that until I think he has a comfortable ratio. I think that's kind of the way to go. So I will probably be doing that. Also, there's so many good stablecoin yields that it's not like you'd be bored in DeFi if you were, largely exposed to stables.
I think my long thesis and kind of why I'm feeling more optimistic in the longer term is like, I remember for so long, the thing was the institutions are coming. The politicians will start paying attention. This will become mainstream. People will start using stable coins. And all of these like prophecies that were kind of just like hype shill back in the day are coming true. We really do have a ton of interest in the crypto sector. It's being used more and more. There's, institutions that are actually like creating their own L2s. We have, TradFi who are investing in, ETFs, pension funds that are investing in ETFs. We have an incredibly favorable, political apparatus on the Republican side who's very positive on crypto. So, you could be right, like that's totally possible. And we could top something like that in March. But I do feel like there's a good chance that we have, quite a constructive period for the next little bit longer while, like maybe more like a year or even potentially a little bit longer. But we'll see. I also, my approach is quite different. I tend to be much more diversified in like holding different majors. I also do hold stablecoin. I tend to not use leverage at all, right? So it is a little bit more comfortable for me to, sit through these different drawdowns. If it's a, 10%, 20%, 30% drawdown, obviously it's not pleasant. It can be incredibly, nerve-wracking and painful to go through these things. But, I'm not facing margin calls or liquidation points or anything like that. So it's kind of just an expected thing in my assessment of how these things go. But one thing I'm curious to hear about, Steven, is I know that you have a bit of leverage on, you have in the past been kind of like the delta neutral guy. I'm curious about what your experience has been using leverage. And I know that I think used a couple of different platforms for doing it, and kind of like your thought process between using perps, using money markets to get that long exposure or that leverage long exposure.
Yeah, so I have been leveraged long for, I don't know, since ETH was at like 2400, 2450. And from there, basically what I did is I went to DUI. Well, actually, I was leveraged long on Contango for a bit using, I think underlying was Compound, because they had really good incentives and I was effectively being paid to leverage long. It was awesome. Then I moved to DYDX because rates just got worse. And really, I was concerned about liquidation profile. And with perps, you get a better liquidation number, right? Liquidation price, because your minimum margin requirement is just better. But with perps, you're also paying at the wazoo. I think by the time I closed my position on DYDX, I was paying effectively 80% APR on my principal. I had paid like $30,000 in funding. I had the position open for months, so that's why you're typically not supposed to have a leverage position open for months, but I just wanted to stay leveraged long, and I knew that I couldn't time the market, but I had a strong conviction it was going to go up. So, I rode that up from like 245 to, I don't know, I exited that position a few days ago at like 3.3, 3.4, and I transitioned it into Aave. Now I'm using Aave because they had cross margin, so I wanted to have like Bitcoin and Ethereum exposure. By the way, you're welcome, guys. The moment I decided to like put half my portfolio in Bitcoin, you could probably guess when it was. It was, no, ETH BTC is what I want. Yeah, let's go to the daily. If I zoom in, you can see right when the pivot was. Yeah, this was around the time where I decided to go into Bitcoin. That's what happens. So anyways, now I'm like Bitcoin exposed, and I'm ETH exposed. Bitcoin is down, ETH is a little bit down. And the benefit of this is that when you have cross margin exposure, if one of them goes up, you're doing okay. You're sort of like avoiding liquidation. Also, psychologically, I wanted to be able to cheer for a Bitcoin rally as well as cheer for an ETH rally, and not just be like, Bitcoin is performing and ETH isn't. I wanted to be able to be excited. I also want a Solana exposure. I don't have that yet, but my leverage long thesis was that it's going to be hard to beat being leveraged long in a, quote unquote raging bull with yield farming. Yield farming is amazing in like crabbish conditions. It's amazing if you're uncertain, but you think things are going to go up. It's amazing if you're doing delta neutral plays. It's amazing in most circumstances, except for either, I don't know what the word for like a raging bear is, but like if it's down only price action, you want to be short if you can be short. If it's up only price action, you want to be long if you can be long, and leverage long especially. Now, there are liquidation concerns. Certainly, that's why you want to have some margin on the side, some capacity to unloop or unwind. And I think here's where I get excited about things like Fluid and Aave, because they are relatively forgiving with like liquidation criteria. You can also do a debt swap or a margin swap if you need to, which makes it really easy to exit a position. And then Fluid effectively just like transitions your collateral into, it's like instead of liquidating you effectively get swapped, which is a much more forgiving liquidation mechanism than most places, which charge you like a 5%, 10%, 15% fee to liquidate you. So I would definitely, if you're going to do leverage, one, don't, and two, be incredibly mindful of the criteria for liquidation, your prices which you get liquidated, the penalizations for liquidation, and then like what you're going to do to mitigate.
Well, one piece of good news for you, I'm trying to find the specifics of this, but I'm pretty sure that right now the Aave has a merit program. And so if you're collateralizing wrapped BTC and borrowing USDT against it, you're earning some rewards in USDC, which is pretty cool. They also have, if you're collateralizing Coinbase BTC and borrowing USDC against it, you're also earning an additional reward. I'm not sure if it's crazy high. I think it might be, like a percent or something like that. But
is that the so like on the Aave front end, on like Ethereum, for example, you can see, or at least you could see, that there was like some additional percent. I can't see it anymore. So this is like, is this through Merkle, or is this just like kickbacks, or will it be shown on the front end? Because I used to see it was USDT borrowing. They had a little thing there, but I don't see it anymore.
Yeah, I'm trying to find the specifics of it here. This is, I think, the link for it. I am not super familiar with exactly how it works, but this is a dashboard which I just shared with you. And so if you click there where it says merit info on the top left-hand side, or the next one over.
Hey, I think I'm doing that. Supply, wrap Bitcoin, borrow USDT.
Yeah.
Okay. I think I'm eligible. I don't know what it does, but go. So I'm going to hold go. I don't understand this, but I'm excited to maybe get this.
No, I'm pretty sure you are getting it. And I think you can go to this website and collect your rewards. Please connect your rewards. By clicking claim rewards, you will claim all your rewards. Oh, it is a Merkle. So I guess we can see that. Anyway, we don't have to get too deep in this.
Hey, look, I got rewards. I got $4.
See? Look at that.
Let's get it. All right.
Yeah, so you've
got it open for a few days. It's not terrible. It's a coffee every few days. I mean, a little coffee at Starbucks is like $10 now, but it's a cheap coffee.
Yeah, well, I mean, it's also just kind of cool that, like, Aave is giving out rewards for very specific purposes. And, like, I'm not sure. It'll be interesting for you to give us updates on, like, what the actual APR of this is and how it works and stuff. But, Aave is pretty cool and pretty valuable, especially with this, like, cross-margin thing. It's really one of the only places you can do this cross-margin, where you can be long both BTC and ETH, and then, take out leverage, in this case, with stables against something else. A lot of the other money markets that, like, I would consider using, or I consider safe, like stuff like Compound or, Fluid or Euler or something like that, don't have as much liquidity to do this, or don't even have the capability of using cross-margin. So it is pretty cool. And it looks like you're earning 4% APR on that position. So that's cool.
I was trying to understand that. Oh my gosh, so many tabs. It says, but it also says supply Pi USD. I don't understand why I would say this, because I'm not doing that. And this also says check rewards on base, but it says, okay, I got it. So these are my rewards on base. That makes sense. Yeah, so I'm getting like, I don't know, maybe I'm getting 4%. I don't know if this is on my notional value or if it's on my principal value. I could do the math, 4.2 over a few days. Let's, I'll circle back. We'll talk about it next week when I have some more information. But this is exciting. I'm glad that I'm getting incentivized by some USDT. Also, that I just happen to have supplied wrapped Bitcoin and borrowed USDT instead of USDC. It looks like it's doing well for me. Pat myself on the back there. Yeah, so I am leveraged long, which is, I've leveraged probably like 98K Bitcoin. So, maybe I leveraged long at the top, but I'm like 2x leveraged, which is, again, just as a rule of thumb, don't leverage. But if you are going to leverage, please be super mindful of everything you're doing and know where you're leveraging. So there are a bunch of places to leverage, and we've, in the dojo, we've like extensively analyzed the best places to leverage, the worst places to leverage, the criteria where you want to leverage. Like, for example, if you're doing loops, which is taking some yield-bearing asset, borrowing its primitive, and then converting it to the yield-bearing asset, and just doing that a bunch of times. Oracles are the really big concern. When you're leveraging long, really the big concerns are the things that are a little more obvious, which is like LTVs and then liquidation penalties. So you want a high LTV because that gives you a lower price at which you get liquidated. So those are the really important things. You can check most of this stuff on Contango. So Contango as like a data app is actually really useful. So let's say you wanted to leverage Bitcoin, right? Bitcoin, USDC, probably decent. It'll just give you all of these options over here. So Aave, Morpho, Compound, Euler, Fluid. And what you're looking for is the best APR, right? They're all going to be negative, I would imagine. I think any of them are going to be positive. And then once you click on it, you want to go down and check your liquidation price. So here at 2x leverage, liquidation price is like 58K. This is using Aave V3 on OP. Now, it's negative 11%. That's not bad. By the way, that's on your principal. So negative 11% on your principal. That's really, really good to go long on Bitcoin. Now, you can check Morpho. So actually, who do I want to check? I want to check Compound. So Compound has probably also around the same as 53.9. Yeah, and Compound says 53.9, Aave 58.9. So technically Compound is better. here for that, which is really interesting. And you just go around and check them, right? So you want to know where another thing is like interest rate, right? So where is there liquidity to borrow? That's also really important, because if there's no liquidity to borrow and you borrow a lot, you're going to be paying a lot in interest. It's similar to high funding rate. It's just going to eat up your principal. And then you want to check your liquidation price. You want a low liquidation price, low interest rate, ton of liquidity, and then like not a lot of penalization for liquidation criteria. So all of those things are the major concerns here. And for me, like Aave, Compound, Fluid, these are the places I'm looking for. Perps, I like Hyperliquid, I like DYDX, but it's just so expensive to hold long positions there now because funding is just so crazy, which is why like Athena yield is so high.
But those are really just good for short-term traders. Like there are different mindsets people have, and some people are just swinging in and out of different trades. They want to, be long for a couple of hours, a couple of days, a certain asset, and then jump back out. And the execution for being able to do that is pretty hard to beat on perps. But, from what I understand you're trying to do, which is just like longer, more gradual leverage, like the ETH, leverage long you had for what sounded like a couple of months, doing that in DeFi is much cheaper. Now there's more, as you pointed out, like LTVs need to be checked, the depth of liquidity needs to be checked. But in general, you can pay quite a bit less. And then even when things get super frothy and like, you're paying 15% or 20% on some of these wild spikes that there are on stablecoins, it's still probably quite a bit less than perps. So I'm not much of a leverage longer. I tend to just kind of like hang out in spot. And then what I'm doing with leverage is like, leveraging Delta One assets. So like, ETH derivatives. But we've talked that topic to death, so I won't bore folks with that today. But yeah, it's super interesting to hear. Sorry?
Let's talk about Zirkit for a second. So Zirkit airdrop came out yesterday and was super hyped. I mean, the pre-market, which by the way, congratulations for hedging your pre-market, but we should also talk about risks of that, because a lot of people who just like slept like a normal human being might have got their collateral liquidated. But it went from, 13 cents in the pre-market down to currently it's, 6.5 cents. So it halved, I won't say overnight, but over a couple of weeks. So explain how you played that, and then explain like the major risk that there was with the settlement.
Yeah. So Zirkit, just for folks that aren't familiar, is a layer 2. They have, been innovating on, I think, the AI side of things, like trying to incorporate more AI into their L2. They had an incredibly successful deposit campaign where, during the heated hype of LRTs, you could go and deposit your ETHify ETH, your Renzo, your Kelp, your whatever it is into Zirkit and earn additional points through that. So people were doing that with Pendle, people were doing that with Fluid, people were just going and depositing things vanilla. Anyway, there's, I can't remember how much it was. It was at least $1 billion. It might even been like $2 billion that was in Zirkit. And so they did this pre-deposit campaign. Now they have moved to mainnet. So like the actual L2 has launched, and so has the token, right? As you said, it's priced at something like 660 million right now, FDV, which is pretty interesting. It's almost exactly lined up to Scroll, which is kind of what I was thinking would happen. It's like hard to differentiate these things a little bit. And that's why I hedged. So I was using Fluid for quite a long time, leveraging up EtherFi ETH back when there was not great options for doing that, like on Aave or on Compound or other places. And I was paying exorbitant prices for that leverage, but I did get this like fun and sneaky airdrop, which was the Zirkit airdrop. And it actually ended up being pretty big airdrop. I mean, probably not like the biggest airdrop I've ever received. I think Arbitrum is maybe still takes the cake on that one, but I think that Zirkit, is at least like a top 5 or something like that airdrop that I've gotten. And I was kind of looking at the pricing in the different L2s, and I was thinking like, where does Zirkit fit in? My base case was kind of like Scroll. I did think it could potentially do a bit better, and it may still well do that. Like it does have a lot of hype and attention. But what I did was I hedged by using pre-market on Bybit. Now this was in a couple of different places you could go. And essentially what you're doing is it's like an order book where you can place a bid and say, hey, I'm going to put up this collateral. In the case of Bybit, it was like 100% collateral that you had to put up. And then you could just like name the price that you wanted to either buy or sell Zirkit. And then there was just a matching function that happened there. So I was able to sell a bit over 50% of my Zirkit tokens between 11 and 12 cents, which so far looks like it was a pretty great trade in terms of like, it's depreciated by, let's just say roughly 50%. I'm so quite happy with that. The challenge was though, I had to get up very early in the morning because the period in which I had to clear that was very short. So you had to come and bring in my case, I had sold the token, so I had to bring my tokens and I had to deposit them into Bybit and then have the trade cleared that way. It was very early in the morning. I woke up. I was able to get some transactions through. It was pretty stressful because technically it was only like an hour and a half period of time that you had to clear this trade. They did end up extending it. So like, hopefully people did not get wrecked and hopefully, people didn't lose their collateral because it is pretty brutal. Like if you didn't, fulfill the other side of the trade, you just lose all of your USDT and then the other trader essentially just gets to keep all of your.
And you had to be like collateralized or over collateralized. So if you want, let's say you went into one Zirka, you had to have, 11 to 12 cents per ZRC. And so if you got liquidated, you're effectively losing 13 cents for what is now worth 6 cents of an asset.
Exactly. Yep, exactly. So pretty punitive in that sense. And also because the chain was having issues, like transactions weren't going through. So I don't know. I'll think about this for future airdrops. Like if I want to hedge this way, it all worked out this time around, but there were moments there where I was getting pretty nervous before they had extended the deadline that I wasn't going to be able to get my transactions through, that I was going to lose all my collateral, classic like crypto, day one airdrop fashion where everything's just like pretty manic. But yeah, I think it's interesting. I'm also very excited for the Mantra airdrop. That's going to be another very big airdrop, I think, for me. I've mentioned in the past that I'm a holder of Celestine sloths, and there is going to be a pretty juicy airdrop that goes out to folks with that. So that's an interesting one because it's actually live, right? Like it's been trading for quite a while. It has perps. It has all these things. And I've been thinking if I should hedge that one as well, on perps or something like that. But the experience of Zirkit has kind of like turned me off, and I think I'll have to like slow down a little bit on hedging some of these positions. Although it might, technically be a good idea to do it. The stress levels when you're dealing with liquidations, when you're dealing with giving up large amounts of collateral can be quite a bit. So,
but it only is already a live token, so you could just hedge that without any pre-market concerns.
Yes. Yeah, but it's a year. So the difference with Zirkit, it was like only and Mantra is a year. So that's a tough one. Did you have a good Zirkit airdrop? Did that end up being meaningful for you?
Relative to what my expectations were, yes. I think it'll still just be about 10K. It was going to be, like almost 20K back when it was 13 cents in the pre-market, but of course I didn't hedge. So now that it's like 6.5 cents, it's around 9.5K, which is still really good because it was something that I had totally written off as nothing or not going to be very meaningful. And it came almost entirely from my Fluid and Pendle plays. Fluid, I think almost everyone in the dojo for season 1 and then a portion of season 2 of EtherFi was like leveraged as much as you could possibly be leveraged on the wrap EtherFi ETH, wrap staked ETH loop. It was like net negative without airdrops 100% or 200%, but we were just assuming it was going to be, hundreds of percents of APR, and it was for season 1, and now Zirkit has added on to that. So, I certainly paid down a large portion of the fees that I had paid for that. So yeah, I was very, very excited to get this airdrop, and I sent my airdrop to MEXC thinking, hey, well, this will be a way to exit because I don't have a Bybit account, I don't have, a Palau ID or anything. And MEXC was like, you're in the US, you can't KYC, we're not going to let you even swap this through the spot market. I said, oh, okay, well, let me withdraw. And they said, no, you can't withdraw it. You have to wait 24 hours. So I'm finally withdrawing my ZRC. And I can only withdraw it back to Zirkit, which is ironic because I thought, well, at least I can withdraw it to Ethereum, then I can save a step and then sell it on Uniswap. But no, so now I have to send it back to Zirkit, then bridge it to Ethereum, then I can finally sell it. And hopefully, it'll be a nice little boost given my current leverage down price action.
Yeah, nice little stimulus. Speaking of stimulus, one interesting thing that's coming up is Jupiter is kind of moving to the phase of having their airdrop. I think I'm getting the numbers right here, but if not, someone please correct me in the chat, in the comments section. But I think that Jupiter is going to be doing an airdrop of 10% of their total supply. I think it's going to be sometime in January, end of December, January kind of thing. Now that's a massive amount of money because Jupiter right now is valued at $10 billion FTV. So that's essentially, I think, what is going to be like $1 billion airdrop. They already had a massive airdrop that happened earlier on when they first launched the token. But just a couple points on this. Number one, if you are staking Jupe, like myself, I am, of course, a classic bag holder staker who loves to vote on proposals and get, hopefully, these airdrops as well. There is a proposal that's up live, and you should definitely go vote on it because I think that will likely be one of the criteria for receiving that airdrop. It may also be that other people who use Jupiter are going to receive a pretty juicy airdrop as well. So this could be people like, for example, who are holding JLP. This could be people that are just swapping on Jupiter. This could be people who are, I don't know, doing any sort of actions on Jupiter, might be receiving a portion of this $1 billion airdrop. So definitely worthwhile going to check that out. If you are a Jupe staker, definitely go and vote. I think that's definitely worthwhile. But the bigger question is, when this does happen, I mean, it's kind of like an injection of $1 billion into Solana, which is already in kind of crazy, wild, manic mode. It'll be interesting to see where that goes. I mean, I think that the left curve version of like what happens is like people just sell their Jupe directly into memes, and memes probably perform super well. But I am curious just to kind of see and think about like the knock-on effects of like what will happen when the Jupiter airdrop happens. And you know, this was the kind of thing that started off like the very start of like TIA airdrops and stuff. We had the Jito airdrop, we've had the Jupiter airdrop. We've seen a lot of examples of big airdrops kind of like breathing life back into markets. So it'll be interesting to see that. And I think we're going to see more and more. Like we just also had Movement Lab confirm their token, and I think they're going to have their airdrop relatively soon. So we're hopefully moving into a phase where December, January, maybe February will be filled with many a happy airdrop, and it won't just be Zirkit and Scroll, these L2s that we've recently got. We'll have numerous other ones that can also not only breathe a bit of life back into Solana, but also into ETH side of things.
Yeah, memes are down, kind of. The meme narrative that hurt pretty badly by like Pumped Up Fund's live stream thing. All of the seriously degenerate, I mean, even like the people who are in the trenches with like the absolute darkest sense of humor were like, this is too far. We've gone too far. Like we've gone beyond the pale, crossed the Rubicon, any other aphorisms you want to put there or idioms. And they had to take down the live stream. So I, for one, very stoked about them taking down the live stream. I think it's going to be good for Solana, but I think it's only a matter of time before someone says, well, if they could do good with it and they've taken it down, we could spin up the same thing, which is a terrible place for DeFi to be. But I'm hoping that the meme top is like getting close to being in. So when you're asking like, what is this $1 billion going to do? I think we're more likely to see a lot of this flow back into Solana. Again, I have no exposure there, so it doesn't benefit me. But Solana, and then I don't think there are any other blue chips in Solana. So Solana staking, Solana restaking, maybe JLP. JLP is a really big asset over there. But aside from that, you know, I don't know. Jito might benefit from this. Jupe might benefit from this, even though they're going to be the ones airdropping. And I don't know. It's gonna be interesting to see what happens. So one of the questions I've had for a long time is what happens when memes are dead. And I don't mean like all memes are going away. I'm sure there'll be some that stay. You know, WIF might be around for a while. Doge is going to be here in perpetuity. SHIB might make a comeback. But most of the memes are going to die. And the narrative, the froth, the excitement around meme coins is certainly going to die. Like at some point, that's just going to be a more or less severely zero-sum game where fewer and fewer winners per capita exist until like 95% of people are losing consistently. And they either exit the space or transition into something a little bit less PvP, more PvE. They go and they farm, you know, incentive campaigns, or they become like more traditional DeFi farmers, move to stablecoins, something like that. And so my assumption is we're going to see an exodus from things like Pump.Fund and an entrance into traditional DeFi. And so I'm wondering what the effects of that will be. Similar to how we saw last cycle, after everyone left the node forks, the Ohm forks, and all the manners of Ponzi's sort of towards the end of the last bull run.
Yeah, it's an interesting question. I would maybe even not say that all the like Tomb and node forks and all that stuff is as similar to memes as NFTs, right? Like it feels like the like last cycle's super speculative thing was like people came in, they were buying all these PFPs. It was going to be like the future of something, you know, like art on chain and all this stuff. And like there was all this like race to the bottom where there was more and more NFT projects and they were kind of like this dilutive effect. But then people really did cycle into DeFi. So like, you know, hopefully that happens. I think it would be very interesting and exciting to see. You know, the other side of the coin is that like with all these new airdrops that are going to be happening, it's also just like more and more tokens for the market to digest, right? Like another $1 billion of Jupe for the market to digest. Like what happens to the price of Jupe? In March, there is a massive unlock from the estate that's going to be happening in Solana tokens. Like, how does the market digest that? We now have Zirkit. We now have Scroll. We're going to have Movement Lab. We're going to have Barachain. We're going to have all these projects launching
Can you explain movement to me like I'm an idiot? Because I know people are hyped about it. There's a pre-market for it on Avo. What is movement?
What is the pre-market trading for that? I'm actually kind of curious about that.
On Avo, it is. Let me pull it up here. Wait, no. Is movement any? No, movement is move.
Yeah.
Maybe there isn't a pre-market for it, or if there is, it's on like whales or something.
Okay. Interesting. That would be very cool if there was a pre-market for it, because they literally just launched like the token information, I think yesterday or something. But you don't see it. Okay. But movement is basically going to be bringing the Move program language to Ethereum, essentially. So like this is an Ethereum aligned project. Like the airdrop, for example, will be happening on Ethereum, which is kind of interesting. I had kind of always thought about them as being their own L1 and doing kind of like their own work there. But yeah, I mean, I think basically this is like a new programming language. You know, Solidity is famously a fickle coding language, and I feel a little bit uncomfortable speaking about coding languages as not being a technical person that actually does any coding. So take all this with a huge grain of salt. But from my understanding, you know, Solidity is a very kind of fickle coding language. We've seen that with like just the myriad of exploits that have happened in DeFi over and over and over again, with reentrancy attacks and all sorts of other stuff. Move, I think, is supposed to be kind of much more of a easier language to use. It is the language that's used on Aptos and Sui blockchains. So like obviously those have had massive popularity in this kind of recent cycle. And so then movement is going to be basically that coming to Ethereum, bringing different speed, bringing different ease of use of a coding language. And yeah, we'll have to see how useful it is. I have not spent a huge amount of time on them, but now that of course their airdrop is going to be happening relatively soon and I have high hopes of receiving it, I will start paying more attention to it.
So just to clarify, Move is going to be an L2 written in the movement language on Ethereum.
I'm not 100% sure it's going to be an L2 or an L1. I think they're using they're using Move as language, but the airdrop is definitely going to happen on ETH. It's very much ETH aligned, but I'm not 100% sure. I kind of thought about it previously as being its own L1, but now that they're doing the airdrop on Ethereum, it makes more sense that it would be an L2. Anyway, this is another topic we can maybe look more into. Hopefully we'll have more info on it for next week.
Oh, it's an L2. And I'm only saying that because Movement has said, unlike most other Ethereum L2s, Move is Movement's native token for gas and staking, which is also interesting. So instead of having ETH as the native gas for the L2, which like is the standard for all L2s, Move is going to use Move, which gives it a use case, which is kind of cool, as the gas token. So it kind of reminds me of, I would say Near, but Near's not an L2. Aurora was the L2, but Aurora also used ETH as gas, I think. I think they wanted to use Near, but they never did. Is Aurora still alive? We don't talk about Aurora. I hope they do well. Interesting times. So there are a bunch of like airdrops sort of coming up. Move is one of them you're excited about. Hyperliquid is one that I'm excited about. I hope that happens eventually. I think, there's a pre-market for it already. Hype is still trading around $3 to $5 depending on when you look. Whales has the points at like $13 per point. That's very exciting. You've mentioned Scroll, which already happened. Linnea is also up and coming. Are there any other airdrops you think will be big sort of ground shakers?
Yeah, and I was also just looking at kind of what are some of the headlines of why people are excited about movement. So I guess one is that it uses a Move virtual machine. So that's, so it's not using the EVM. They have developed their own virtual machine, which has very high TPS, apparently, something like 145,000 transactions per second. So it will go and compete with the Aptos and the Suis of the world. For most use cases, arbitrum optimism, many of these L2s are fast enough. But if you're trying to develop an environment where it's all about trading and really fast things happening, there really isn't, I guess, like an L2 that can kind of compete with like the Solanas of the world. I mean, I don't know. Base is pretty fast. But anyway, that's one big thing. They're also using Celestia under the hood, which is pretty interesting. So they're going to be using data availability from Celestia. They're going to be cross-compatible. So they will be able to interact with both EVMs and Move EVMs. So that's interesting as well. And then they're also kind of innovating on the sequencer side of things. So yeah, could be cool, could be interesting. That being said, we already have a lot of L2s. I think we're seeing all these different like features, like Scroll is kind of like ZK L2, Zirkit is like the AI L2, Move is this like super fast finality L2. So yeah, it'll be interesting to see how these things progress. In terms of other airdrops that are happening, I think, so Barachain is one that I'm definitely paying quite a bit of attention to. Union is one that I'm paying quite a bit of attention to. Movement is another one. I think this Jupiter one will be very cool. I think we'll probably have, at least, 4 or 5 major projects airdropping in the next couple of months. And so, for the people that have been doing their work out there, especially, the folks out there in the dojo who have been airdrop farming these things for long periods of time. And by airdrop farming, I mean, there's a lot of ways you can do that. You can spin up tons of wallets. You can do all these actions that you think are kind of prescriptive to getting an airdrop. Or you can just kind of be an active DeFi user, touching lots of stuff and doing lots of different things. And to be honest, like that kind of plays out as being one of the best ways of getting lots and lots of airdrops. Zirkit being a perfect example of that. But anyway, for the people that have been kind of paying attention and who have been out there touching lots of different stuff, I hope and I think that the next, 2 to 3 months could be a really fun and exciting time.
Let's have a question, which is, you've seen a lot of success from your airdrop farming. We've seen people who we work with that are like LPs that have seen a ton of success with airdrop farming. We were talking to someone yesterday who's looking at probably getting like a 70K airdrop from Usual Money, which, by the way, mind-blowing valuation. And like anyone who farmed that, congratulations. The airdrop there should be big. But from my perspective, it's like, it's not airdrop farming or yield farming. And I imagine your perspective is the same. It's you want to yield farm where you can also qualify for airdrop farming. Is that your thesis, or do you have a slightly different way of looking at it?
Yeah, I mean, so for example, there are the best times to kind of like be airdrop farming is when you're doing an action that's, also productive in some other way. So like the perfect example of this was like the scroll farming that I did where I was looping up wrap staked ETH and EtherFi ETH on Scroll, and it was earning, the EtherFi airdrop, the Eigenlayer programmatic rewards, and on top of that, the Scroll airdrop. So like that is my preferred way of doing it. Now I also just have many different wallets that have just like random altcoins staked, and I'm voting on proposals, or I'm, sometimes trying out test nets or trying out a protocol when it's very early. I haven't found a lot of success with testnets personally. Like I know people that have, and maybe if you're doing that at more of like an industrial scale, that can be great. But for me, it's more like, going and bridging to different, ecosystems that are a little bit lesser known that don't have a token, or, participating in a small scale DeFi in new protocols. Obviously very risky, but like there have been lots of examples where that has paid off. So it's kind of a combination of doing farming where in a place where there is points or you're using a tokenless protocol that would be interesting anyway, or just for the complete purpose of airdrop farming, bridging over places, trying out new protocols. And for those ones, I use different dedicated wallets. So like I am very careful about my wallet hygiene. I do not like using protocols that are unknown or untested with like obviously large amounts of money, but even just with wallets that have large amounts of money in them. I have just like small airdrop wallets that have maybe, $1,000, couple $1,000, where I've just like spread out across a lot of different places, just trying out new protocols, doing new and interesting different types.
Okay. Now, one of the things that, I mean, your wallet hygiene is ridiculously impressive, whereas like most people, maybe they have like a Ledger or a Trezor or various other hardware wallets, and they're using like one major wallet. I talked to a whale yesterday who was finally moving to having multiple wallets. They said, I think having 7 figures in a single wallet and be my only wallet is just a systematic risk, even if I'm using a hardware wallet, and even if like, I've never copied or pasted my keys anywhere and they exist in like a safe somewhere hidden underground. It just doesn't make a lot of sense to have all the money in one wallet. And I think, some people take that to the extreme, or I don't know if you remember Dreco from like the last bull market, but he would never have more than like $10,000 per wallet. And he was, a 7-figure investor. So he just had a ton of wallets, and he had a hardware wallet for every single one of those. I think you're probably somewhere in between, but wallet hygiene is important. If one wallet gets exploited, then you only have like a maximum of X% of your total capital lost. Whereas if you only have one wallet and that gets exploited, game over, you're done.
Yeah, and I don't necessarily just split up for the sake of splitting up. I do think that having one wallet that has 7 figures in it is a huge systematic risk, and like that's not a great approach. But I don't think you need to have only $10,000 per wallet or something like that. But the things I do think are important is obviously using a hardware wallet. Like just number one, anyone who's not using a hardware wallet, please go out, get a hardware wallet. I know that like, there's some interesting, I can't remember what it is, like Ledger is having some deal where you can actually get like $70 of BTC or something like that if you're buying one of their new products. Anyway, if you don't have one, go check out Trezor, Ledger, whatever. It doesn't really matter. but just get one of those. And then after that, my approach is I have dedicated computers for doing crypto. So like I have one computer, which we're actually talking in right now, which is kind of what I consider to be my like dirty computer. I use Telegram, I use Discord, I use email, I'm clicking on stuff. It has a couple of wallets, but they're very small wallets that like if they got drained tomorrow, I really wouldn't be too worried, but it's kind of like my dirty computer where I'm doing whatever. Then I have dedicated computers that are just for doing trading and doing DeFi and stuff like that. And then those are very limited in what they interact with. So I'm only using trusted links. I'm not opening email. I'm not opening messaging apps. I'm not doing any of those things, with the idea of trying to protect against, phishing or spam attacks or something like that. And then in terms of like breaking up into lots of wallets, I do think that, like doing that is a good idea, but even more importantly, like revoking permissions. So I try to revoke permissions on different things that I've approved in DeFi at least twice a month. I would prefer to do it every week if I could, but I oftentimes forget. And you can do that.
How do you do that? I know like Rabby makes it relatively easy. You were also a late adopter to Rabby, but eventually I think you came around. There's also been like revoke.cash. I think it was and you can also use DeFi to do that. Do you have a system that makes it easier than other systems to do your revocations?
Yeah, I just use Rabby. You are correct. I was actually very late to Rabby. Maybe not very late. I was later than the rest of the dojo. The nice thing about being part of the DeFi dojo is like there's so many smart people there that you get to see all these different experiences. And so people were using Rabby, they're having a great experience with Rabby and encouraging other people to give it a try. I was very resistant. I don't really know why. I think I just like the idea of using a new wallet that was less maybe trusted, less battle tested. It was scary to me, right? And so I moved a couple months after like most of the other folks in the dojo did. That being said, the user experience of Rabby is way better. The fact that MetaMask is still as buggy and kind of just a challenge to use is still always blows my mind whenever I go and like use one of those wallets. But anyway, getting back to Rabby, they have this great feature where you can revoke permissions. You can do it as a batch. You can do it like all together, kind of like with a few different signings. I am also, again, a little bit squeamish of doing it that way. I do trust Rabby, but I really like to be able to know exactly what I'm signing every time I do it. So I'm always a little bit squeamish about batch transactions. So I just sit there for like 10 minutes and just manually click and revoke them. It's a little bit old school, but I feel super comfortable. I can like read what I'm actually doing. I can see it. If you're doing it in the evening or on the weekend, it doesn't cost that much of gas. And what I always say, like people are always like, oh, I'm spending so much money on gas revoking all this stuff. In reality, if you're doing it during kind of a quiet time of the day, it's probably not costing you more than like $1 to revoke something on Ethereum. And like the consequences of losing whatever amount of money, I'm sure, is way more than $1 for people that are like serious and active in DeFi. So that's my approach to it. Separate computer, lots of hardware wallets, regularly revoking stuff, being very careful with links, like never Google links. That's like always makes my skin crawl seeing people do that. And just kind of be careful out there. And then also, don't do stuff in a rush. Like there have definitely been times where I've been close to getting scammed for something. And like the classic way that this happens is, so I have like an application that I use that like tells me about proposals when they're being launched and so I use that to do research into DeFi, but also sometimes it's related to airdrops. And so there have been the odd time where there's been some proposal that's out there that's like one of these scam proposals. Most of the time they're written terribly, like they're like airdrop for something, and like those are pretty easy to figure out that that's not true. But there have been one or two where I've seen and I was like, oh, I need to go like sign up for this and get my, address on a list. And it's like when you're tired, when you're stressed, it's happened to me when I've like just gotten off a long like flight or something like that. And I see something like that and it like just catches a part of your brain where you're like, oh, I need to go do this right away. And you're not fully paying attention. Having a dedicated computer, having a hardware wallet, making it a little bit harder for yourself to go do things gives you enough time to realize, oh, this is social engineering. This is a phishing scam. I should not be doing this. And that has also saved me a couple of times with those kind of issues as well. But yeah, what's your, operational security? Do you have any other kind of tips and tricks, Steven, in terms of like how people can protect themselves in DeFi?
I'm never going to beat your operational security. It would make me look silly to even compare. But I will say that Rabby, as one safeguard is fantastic. I mean, in terms of wallet hygiene, you're going to be the guy to go to. One thing I want to add on that, though, is the DeFi Llama extension. I know it's like a random thing, but what it does is it also warns you of malicious Twitter links. So if you're scrolling through X and you see, oh, claim your airdrop, you see like, you're looking at EtherFi or Renzo, whatever, and there's a post that says claim your airdrop or like special offer or whatever, and it looks totally official. What you'll see is if you have the DeFi Llama extension, it'll be like totally highlighted in red as a warning, like don't click. And we've seen so many people, in the dojo, on X, just like in my own personal DM saying like, my money's gone, what happened? And, almost always it is they clicked some malicious Twitter link. And even though they have a hardware wallet, even though, they have decent hygiene, the link looked legitimate. It looked like it was from a legitimate source on X, and they get rugged that way. And so on top of having good wallet hygiene, I do think that DeFi Llama extension is one additional safeguard. It's really important. Just seeing these scam links obviously highlighted in red is going to be a really good, helpful indicator. One, additional layer of protection for you. And then also what I will say, and I've said this, so many times, just don't ever click links from X. There's no reason to do it. There's no reason to do it. Like, you can find a better source of truth, because on X, accounts get hacked all the time. SIM swaps happen all the time. One of the other, like if you're going to be a link clicker from X, at least see if there are comments. If comments are turned off on a post, it's always a scam. Like just never, like that should be another major indicator. Comments are turned off, the link's a scam, period. If it's highlighted in red because of the DeFi Llama app, it's a scam, period. If it's anything that's going to give you money, your first instinct should be scam. You like if there's a post on X and you benefit from it, your first indication should be hesitation and think it's a scam, and you should try checking with the team directly or going into the Discord and like asking everyone that are real people. Don't look at announcements, because even announcements can be hacked. You really have to assume the worst of everything in DeFi to be safe, even though there are amazing and incredible people in this space, just because your money, your well-being is on the line to some extent. So assume everything is a scam. Get the DeFi Llama app. Never click links on X if you can help it. And especially never click links if the comments are turned off. That's a huge, gigantic red flag. I think that's something that people don't think about as much, because you can, get a dedicated computer, which you should. You get a hardware wallet, which you should. Have good wallet hygiene, which you should. There's always that additional sort of human factor or social engineering that you also have to be really hesitant or aware of.
Yeah, absolutely. Absolutely. Though I will say turning off the comments is becoming kind of more and more of a thing. Like I think projects, it's like this weird mind game thing where like projects are turning off the comments so that like scammers can't post terrible things. But it's also,
a lot of them, what they'll do is they'll not turn off all comments, but they'll turn off comments for accounts they don't follow, like EtherFi does. And that's better. And then you can trust that a little bit more, I suppose.
Right. Yeah. Anyway, Twitter is a weird and wonderful world out there. I 100% agree with you. Don't click anything you see on Twitter. Don't even put Twitter on the computer that you do your trading in. Like what I was saying before about like the step of having to, move from one device to another one. Think about what link you're using, type it in, find it again. Like it, slowing down when you're doing these things is always beneficial. And anytime someone's trying to encourage you to do something fast right now, this instant, that should also be another red flag of like, well, why is that? Why do they want me to do everything so fast? Are they trying to trick me into doing something? Because quite frequently they are. So, yeah.
I wonder when exploit season's going to, I shouldn't say this out loud, but I wonder when exploit season's going to happen. The last cycle, it was towards the end of like Ohm fork season where we just started seeing exploit after exploit after exploit. And at first they were small. They were hitting mostly the forks. Some of the compound forks were getting exploited. A lot of the Ohm forks were getting exploited. The node forks, the tomb forks, the signorage. I don't know, that's a fancy French word for magical money that's not backed by anything. Forks were all exploited. This season, we've seen a few major exploits, right? A couple. But for the most part, knock on wood, we haven't seen that many major exploits. I'm wondering if it's just smart contracts have become more robust. Obvious attack vectors like reentrancy attacks have been largely mitigated against, and the auditors are like hyper aware of those attacks. I'm hoping that's the case. Maybe just like there's no reason to exploit during froth because you can make money anyways, and desperation is what really keys people into exploiting. I'm hoping that it's the former and that we just have higher levels of security. But yeah, I mean, like the additional thing we haven't talked about is smart contract risk, which is another reason why I'm very, very comfortable in my leverage positions, even though leverage, again, don't do it if you can help it, because they're on Aave, right? And Aave is just like the most trusted money market. Money markets are the most exploited type of protocol. So if you're going to use a money market for leverage, you want to be using like a really, really trusted money market like Compound, Aave. There are a few others I would even mention in the same breath, but those two are like top tier. They've been around since, years. So yeah, there's so many ways to mitigate risk and so many things you have to be concerned of. Go ahead.
Yeah, I'm much more hesitant to think that we're past the point where we're going to have exploits. I mean, just what was it, like a month ago? Radiant was exploited for $50 million, right? That was a DeFi protocol money market that has been around for a very long time and had done some interesting stuff, and it was pretty sad to see them get hit at such a large scale. I know quite a few people that actually were affected by that, so it can be very painful.
And prior to that, there was also UniBTC, which had your typical minting exploit.
Right, UniBTC. It tends to happen around holidays. Knock on wood again. I'm going to do a strong knock on wood. We are in the Thanksgiving holiday season here, moving into the bigger holiday season. A lot of these exploits have happened in times when people are paying less attention. There's, less people looking at their wallets. The devs are away, whatever it is. But yeah, I hope you're wrong. I hope you're right that things have just gotten better. Smart contracts have gotten better. My sense is we will just forever see just a string of these kind of exploits happening until maybe there's some change. There are interesting projects like AVS's, like Drosera, which are building traps, which make, it's much less likely for these types of exploits to happen. And I think, really for mainstream adoption of DeFi. So I think that's something that a lot of people are working towards. We really do need to improve security, and we really do need to find solutions so that, we don't have $50 million lost on a money market that's been around for a couple of years like that. We need to get past that somehow. So, yeah.
Yeah, absolutely. Well, thanks for taking that detour into operational security. I think we'll end it there. Hopefully you guys stay safe this Thanksgiving season. Have good wallet hygiene, check your smart contracts, don't click links, and have a wonderful rest of your day.